Carol Massar, guess what?
Guess what? Another record
high on the S&P 500.
Because everything is awesome. No, it's kind of interesting on a day where we're seeing some progress in the Middle East, although many would say not done yet, and certainly in what's going on in Gaza. But it's kind of interesting as we continue to get more information about what a Trump White House looks like and where we are in the world. Another record here.
I'm pretty surprised to see stocks move higher today. Look, the Treasury trade is a little different, and we'll talk about that in just a minute. But after that news last night that Trump said he'd impose 10% tariffs on goods from China, additional 10% tariff on goods from China, 25% on all products from Mexico and Canada. I'm surprised to see the muted market reaction. Yes, some stocks are lower.
Yeah. Well, I mean, if you run the EQS function, you can sort by the U.S. companies that have outsized exposure to China or to Mexico, et cetera. If you look at those names, they're all getting killed today.
Ford, General Motors, a couple of my decliners.
Yeah.
I mean, this always raises the question.
Do
you want to go through those now, Tim?
No. Just giving you a little deep tease.
This always raises the question of whether this 25%, 10% number that he floated were just trial balloons, the start of a negotiation, or that he could actually take action, executive action, and hit the ground running on day one.
Also, we've seen the playbook.
Yeah.
This is what we had to manage and deal with back in 2016 also.
And it carried through the Biden administration, right, in terms of some tariffs.
Yeah, absolutely here. Well, we get the closing bells in New York, and it is green across the screen, at least for the most dominant of the indices. The OG up 122 points, or about 0.3% here on the day. The S&P 500 up about 30-plus points, or about 0.6%, 6,021 and change. It takes a while for these numbers to settle, but I don't think anywhere they're settled right now is going to take it from that record high. The NASDAQ composite up 100-plus points, up about 0.6%. But to the downside, it was the Russell 2000 leading the declines with a drop of 0.7%.
All right, back to the big caps we go. The S&P 500, guys, almost an even split, but a little bit more to the upside. 272 names actually gaining ground on this Tuesday. Scarlet, 229 to the downside, 2 unchanged.
All right, and 9 of the 11 industry groups in the S&P 500 finishing in the green. Utilities, consumer discretionary, and communication services leading the way, with utilities up 1.5%. Your weak parts of the market, materials and energy just barely lower by 0.25%, materials losing 2/3 of 1%.
All right, guys, to the individual gainers, to that play off of the news that the Biden administration is proposing a rule to require the U.S. government to basically cover those obesity drugs for millions of Americans. It would increase Medicare costs by a lot. We're talking about $25 billion over the 10 years. But for companies like Novo Nordisk, that one was up about 1.5%. Eli Lilly up about 4.5% in today's session. So we definitely saw those stocks gain in the session. Quick over to Wells Fargo. It was up at its highs about 1.5%, finishing the day with a gain of 0.6%. It may be at a new record, and I'm just pulling it up on the Bloomberg. Yep, closing at a record. Reuters reporting the lender is in the last stages of a process to pass regulatory tests to lift that $1.95 trillion asset cap in 2025 after fixing problems from the fake account scandal. This is according to 3 people familiar with the situation. So that could be a blessing, certainly for those who are trying to be bullish on Wells Fargo. And NRG Energy, I had to mention, number 1 gainer in the S&P 500, up 10% today, jumping to a new record high. Yeah. Jefferies upgrading the company to buy from hold, and also, I think, upping its price target. Let me just pull it up. 113 from 93, stock closing at 101.
That's kind of a redundant name, right?
Which one? I know, NRG, I know.
Yeah,
I'm sure there were consultants who were paid a lot of money to come up with that.
I'm sure they were.
Okay.
Hey, let's go to some of the decliners. I did mention shares of U.S. car makers fell today. I want to highlight what happened with General Motors, down 9%. Worst day going all the way back to March of 2020. That's never a good sign. This is over concerns that President-elect Donald Trump's planned tariffs on goods from China, Mexico, and Canada are going to hit those companies. A couple bits of information here. Stellantis, Volkswagen, Ford, and GM would be highly exposed to an increase in tariffs on Canada and Mexico. This is according to an analysis over at Bernstein from a couple days, actually from this morning. Stellantis and VW import about 40% of the vehicles they sell in the U.S. GM imports roughly 30%, and Ford about 25%. That's according to that note from Bernstein. So that's why you see shares of these companies taking a hit today. Also, shares of Kohl's down 17% today. It's actually at the lowest level, going all the way back to 2020. The company cut its full-year sales outlook. It signals struggles in the retail environment. We've seen pressure on retailers who cater to these middle-income shoppers because consumers are becoming more budget conscious. They're shying away from big-ticket purchases and discretionary spending. Shares of Kohl's fell today by 17%. And finally, Amgen fell by close to 5%, 4.76%, after the experimental obesity shot failed to significantly outperform rivals and show a high rate of gastrointestinal side effects. Amgen shares fell as a result. The shot did help patients lose up to 20% of their body weight. Analysts had expected it to help patients lose around 25%. That would help it compete against shots from Eli Lilly and Novo Nordisk.
There was a takeaway that like be best, be first, and Amgen was neither of those things.
Or be to 26%.
Yeah, there you go. All right, taking a look at the bond market here, guys. The belly of the curve still selling off a little bit, but otherwise we're pretty much flat on the day. At a 5-year auction, did pretty well. We get a 7-year tomorrow, about $44 billion. Taking a look at that.
All right, let's get to some earnings here. So a couple of software companies reporting, including Workday and Autodesk. Autodesk shares relatively unchanged here. This after their most recent quarter showed operating income coming in slightly above street estimates. EPS at $2.17. The street was looking for roughly $2.13 a share. The forecast going forward for the fourth quarter, the current quarter, the company sees adjusted EPS of $2.10 to $2.16. That's the range they're giving. The street, on average, was looking for $2.12.
I'm going to jump in here with Workday, another application software company. Third quarter adjusted EPS beating estimates, $1.89 versus $1.75. Revenue of $2.16 billion, also higher than anticipated. It did narrow its outlook when it comes to full year subscription revenue. $7.7 billion is the new outlook, whereas previously it was looking for anywhere from $7.7 billion to $7.73 billion. As for adjusted operating margin, 25.5% is the forecast, whereas previously it saw a range of 25.3%.
All right, guys, let's get to Dell crossing the Bloomberg terminal. And let's get to the red sticky that Bloomberg is highlighting. Third quarter infrastructure solutions group. We're talking about revenue that's coming in pretty much in line with expectations, $11.37 billion. The estimate on the street was $11.34. Third quarter total net revenue. That too is a little light, just barely, $24.37 billion. The estimate was $24.59 billion. And I should point out that Dell, we are definitely seeing some reaction here in the aftermarket. Stock down almost 5%. It has been on a tear. It is up 85% year to date. So again, seeing some disappointment in these numbers.
Okay, let's take a look at shares of CrowdStrike, down now by about 4.2%. That company coming out with numbers. The company sees fiscal year revenue coming in at $3.92 to $3.93 billion. That is above estimates. That came in at $3.89 to $3.9 billion. Third quarter revenue did beat estimates. $1.01 billion estimates were for $983.1 million. Adjusted earnings per share for the third quarter also did beat estimates. Still, shares down about 2.5%.
Department store chain Nordstrom out with its results. It looks like it beat on both the top and bottom line, though the market reaction to the downside. Third quarter adjusted EPS, 33 cents a share. The street, they wanted 22 cents a share, so a 10-cent beat. Net sales also coming in slightly above estimates at $3.35 billion. The street was looking for $3.28. The company says that it's going to stand by the full year EPS forecast that it had previously given. That's a range of $1.40 to $1.70. Not seeing a full year revenue estimate here, but overall, it looks like they beat on most of the metrics here. But again, looks like investors wanted something a little more.
Let's also get to Urban Outfitters, the specialty retailer coming up higher in after-hours trading right now. Third quarter comparable retail segment sales up 1.5%. Analysts were looking for a gain of 1.25%. And when it comes to third quarter adjusted EPS, $1.10, beating the consensus estimate of 86 cents.
I thought Urban Air was cool when I was like 15. Anyway, going back to Dell for a second, because that stock's still getting hit really hard, I wanted to highlight one thing. So within the infrastructure solutions group, we mentioned that revenue came in bang on line with estimates, but the servers and networking revenue, which is where the AI server part is housed, came in a little bit light. It's still up 58%, but it's about $7.4 billion. Now, this is an area where they were starting to take market share from Supermicro, so I'm wondering what the read-through is on that. I didn't see any forecast for that particular part of the company in their earnings release yet.
And a little bit of commentary and context, Alex, from the company's COO, Jeff Clark over at Dell, saying interest in our portfolio is at an all-time high, driving record AI server orders demand of $3.6 billion in the third quarter and a pipeline that grew more than 50%. So interesting for a little bit of color there, but nonetheless, again, investors not impressed. Stock down almost 6% in the aftermarket.
Yeah, more from the vice chair and COO over at Dell, Jeff Clark, saying that our AI momentum accelerated in the second quarter, increased the number of enterprise customers buying AI solutions each quarter, optimized server demand up 23% sequentially, and $5.8 billion per year to date.
Hey, what do you guys think Alix was like at 15?
She was cool. She was cool.
I think she was amazing.
Oh my God.
I think she was tough. Were you tough on your mom?
I mean, she would say yes. I would say obviously no, except for all those curfews that I broke.
I think she was super smart, and she was a gymnast. Like, what else?
This is an offline combo, guys.
Wow, I know. Wow.
This is a way offline
Keep going.
combo.
Keep going, Carol.
This is called Alix Steel. This is your life. This is what we're doing. All right, guys, that's a wrap. That's a wrap. A lot of earnings, a lot of stocks moving the aftermarket. We're going to say goodbye for now, but catch us tomorrow, same place, same time for the closing bell.